Hi friends, good day. Today I'm taking out one more problem. This is problem number 2, page number 24 of our material. A, B and C sharing profits in the ratio of 2 is to 2 is to 1 agreed upon dissolution of their partnership on 31st December 2003, on which date their balance sheet was as under. A's capital 40,000, B's capital 30,000, A's loan 10,000. See, please remember, whenever we talk about partner's loan, we have learned at the time of learning the entries part, partner's loan will not be transferred to realization account. Partner's loan appearing on the liabilities side will not be transferred to partner's capital account. Only partner's loan which is appearing on the asset side will be transferred to partner's capital account. The reason is that partner's loan is having priority of repayment before you make payment to partner's capital account. And reserve fund, of course, this will be transferred to partner's capital account. Joint life policy reserve, you got joint life policy reserve, joint life policy. You have learned about this in partnership foundation. Joint life policy, we are having three methods: expense method, asset method, reserve method. That means 10,000 is a policy and 10,000 is a joint life policy reserve. I think this is waste of time, no need for us to discuss on this. And it is appearing in the balance sheet asset side. When they are following the reserve method, policy will be appearing on the asset side. So is the case of reserve. Because why I am saying it is not required is the reason is that whereas this joint life policy treatment is very important in foundation, here it's a dissolution. I have given the entries to you. The joint life policy, whatever the provision which is there on assets, all will be transferred to realization account credit side. I have told you. So this joint life policy will be transferred to realization account debit side. Joint life policy reserve will be transferred to realization account. And when you're going for dissolution, generally the treatment of life policy is that whatever the value you get, generally you won't be getting policy value. Only unless the partner has died, policy amount will not be received. Since the partners, all partners have all partners have survived, so there's no death of any partner. So then what happened, the insurance company will be paying only the surrender value. Okay, whatever surrender value they are paying, sometimes they will be adjusting some loan which is due or whatever it may be. We have nothing to do with that. Whatever the amount that is being received, and let me clearly explain this one. Joint life policy, if joint life policy question is there in realization account, treatment of JLP. You open realization account. This is just tutorial note for you to understand this. This is tutorial note I am writing. This is for you to understand. Okay. So realization account, you write here to joint life policy 10,000. By joint life policy reserve 10,000. What is that has been given in balance sheet? He has given JLP reserve 10,000. JLP has given 10,000. No. So this debit balance will be transferred to debit side. Credit balance will be transferred to realization account credit side. That means the balance sheet joint life policy and reserve has been closed. Some people, they also open joint life policy account. We have nothing to do because this is a dissolution. Simply all assets account including any reserve on that can be. You got one more alternative also. Some people, they write JLP account. Some people, what they do, JLP reserve, they will be directly transferred to partner's capital account like undistributed profit. And then whatever the amount, I'll tell you, just a minute. Here in the problem, since I am explaining on this, joint life policy was surrendered. Joint life policy was surrendered. Joint life policy surrender means when nothing has been mentioned, how much amount you got? 10,000 rupees you got. So when you got 10,000 rupees, you write by bank 10,000. Okay, then 10 plus 10, 20. 20 minus 10. 10,000 will be transferred to all partners capital account. Exclusively, I am explaining to understand the treatment of joint life policy by opening relation account. I repeat once again. Balance sheet JLP will be debited to relation account. Balance sheet JLP reserve will be created. Amount realized, whatever the amount, don't worry. Here in this case, nothing has been mentioned. We are assuming 10,000 has been received. Some problems they may say 9,000 has been received or 9,500, whatever the amount it means, it is given. You have to show on the credit side of relation account. Alternative, some people what they do, they don't transfer reserve to realization account. Where they transfer to partners capital account. This 10,000 concept has completed and reserve will be created to partners capital account. Even reserve is created to partners capital account through relation account, effect is same, no? Are you following, all of you? JLP reserve you can transfer to relation account, or JLP reserve straight away, just like undistributed profit also can be transferred to partners capital account. But which is easy for us to do? Because when you refer to so many problems future after completion of this, you may be having the doubt. Sir has explained you JLP reserve is to be transferred to relation account, but in the material problem they worked out joint life reserve has directly been created to partners capital account. You also can do that, no issue. So just I am giving clarity of thought. So JLP reserve can be transferred along with JLP to relation account, and amount collected, that means surrender value collected on JLP, is created to relation account. Okay. Or else this JLP reserve can be directly transferred to partners. You either transfer to partners capital account or through relation account, effect will be same, no? So I think which is simple. In the entries I have given you, joint life policy, joint life reserve will be transferred to partners capital account. Clear to all of you? This is treatment of joint life policy, just for you to have a clarity. Tutorial note I have explained you. Okay. Now when you come back to this problem, JLP concept I have explained you. I have told you in the last class, generally creditors for provision. This is very old problem actually. It's from study the CA inter problem only. But okay, surprisingly, you may have creditors less provision for discount. Creditors less provision for discount. I told you, any provision on the liability side, will be debited to realization account. Please try to understand. Any provision on liability is debited to realization account. Okay, so this 500 is debited to realization account. Okay, then salary outstanding. This will go to realization account credit side. Now let me quickly do this where it goes. Reserve fund partners capital account, joint life policy reserve, realization account credit side. Creditors gross amount you should transfer 19,000, not 18,000. This is called as net amount. This is net. This is gross. You always should transfer gross amount, even though which is against conservatism principle. Still, since it has been given in the problem, we are working out. Okay. Gross amount will be transferred to realization account credit side. RC means realization account credit side. Salary outstanding, realization account credit side. Fixed assets, realization account debit side. Life policy surrender value, realization account debit side. Debtors also I told you. This provision gross amount is debited to relation account debit side. This will be taken relation account credit side. This also I told you. Provision on assets. Provision on assets credited to realization account. Okay. Stock at invoice price 10,000, less provision. Again, this is realization account debit side. This is realization account credit side. Okay. Investments, realization account debit side. Fluctuation provision, realization account credit side. Are you following, all of you? Investment fluctuation provision. No, investment is highly volatile. We don't know when investment there is a provision, there is fluctuation of investment. Sometimes the market value may go down, sometimes market value may come down. So generally, to adjust any profit or loss, any changes in the value of investment, generally they adjust through a provision called as fluctuation provision. This provision has been maintained for adjusting the fluctuations in the market value. So this is what is called as fluctuation provision. The investment account, realization account, debit side, fluctuation provision, realization account, credit side. Okay. Then current account C. So that means partner's capital doesn't have any balance, but C current account means he owes money to the firm. So this current account, since we are having A's capital, B's capital we opened, let us even transfer this current account to by opening which account? C's capital account. C's capital account we don't have, but C's current account we are having. It means the partner, this particular partner doesn't have any capital balance. Maybe he is actively involving and doing the like an active partner without investing the money. He may be in carrying of the activity as a partner, working partner, or we can say that his capital balance is zero. Maybe his services are needed for the partnership firm. That is why the A and B are allowing C to continue. We don't know the reason. It's only apprehension. Our apprehension. This can be the reason. But from the problems point of view, since we are opening, we need to open partner's capital account instead of opening current account C. This C current account also can be transferred to C's capital account, even though we don't have C's capital account. See, current account C transferred to C's capital. We need to open C's capital, then this is to be transferred. Even if you retain current account of C like that, also no issue. But since we are opening capital accounts, better C's capital account also can be opened. Bank account will not be closed. So I think what are the account that will not be closed? A's capital account will not be closed. B's capital account will not be closed. A, B and bank account. These partners capital account and bank account will be finally closed after completion of realization account. Okay, now you count the assets just for initially to have a clarity. Fixed assets, asset number 1, life policy, asset number 2, debtors, asset number 3, stock, asset number 4, and investment, asset number 5. We are having 5 assets. These 5 assets, and we are having 2 liabilities, creditors and salary outstanding. 5 assets, 2 outside liabilities. So these 5 assets has to be either realized in cash, or these out of 5 assets, some assets can be taken by the partners. This is what you need to have a clarity. Okay, clear to all of you? So then, and you can see the date. The balance sheet date is on December 31st December 2003. Okay, then what happened then after this? About the stock at invoice price, stock value also sometimes we see market values coming, may go up or may come down. That is where provision has been maintained on stock. Okay, now let us see the investments. Investments were taken over by A at 6,000. Creditors of 10,000 were taken over by B at 9,900. I told you no need to have this gross amount. This is not required. Gross amount is not required. Only we need the value of liability paid or liability taken out. And similarly, value of asset taken over. We don't need to have any, no need to compare, sir. 8,000 book value, 7,500 book value of investment has been taken by 6,000. That is why I'm telling this is very simple topic. Let us not look at the book value or gross value or net value. It is only, of course, book value is nothing but net value. Please remember, whatever the value that has been taken over by concerned partner or realized in cash, this will be transferred to realization account. So here, just for discussion's sake, what I am doing is that here A, investment taken over 6,000. B, this is our tutorial note, just for you to understand. Tutorial note. B, what is that he has taken? Creditors, I think. Creditors taken over at 9,900. This is only for explanation I am writing, my dear friend. No need to write in the examination. What is the entry for investment taken over? You know that who is the receiver? A. To realization, because investment will be transferred to realization account. No, so don't write A to investments. 6,000. Creditors taken over. What is the entry? realization account. Who is the giver? B. Realization account at R2 to B's capital 9,900. Okay, because you can't write Creditas because Creditas account has already will be transferred to realization account. So is the case of investment also will be transferred to realization account. Okay. Remaining Creditas were paid at 7,500. If you look at the total Creditas net amount 18,500, we are nothing to do with this. See, 10,000 worth of Creditas has been. If you look at the total Creditas 18,500, no, out of 18,500, 10,000 Creditas has been taken out for 9,900. Remaining 8,500, 7,500 has been paid. So here I am writing balance Creditas paid 7,500. What is entry you write? Realization to cash. Since it is second problem, just I'm writing so that you can, if you got any doubt, you can refer to it later on. That is why I'm writing realization to cash. Okay, then next. So coming back to joint life policies surrendered and fixed assets realized. Joint life policy surrendered means you know that here what I am writing. Assets realized. Joint life policy 10,000. Assets realized in cash. Joint life policy. So we are having total 5 assets. No, one asset has been taken away by partner. Joint life policy is realized for 10,000. Then next, fixed assets. We are having fixed asset top. Fixed assets surrendered. Assets realized 70. Stock and data has realized 7,000, 9,000. So remaining 3 assets we are having. No, totally here I am writing fixed assets 70. Stock 7,000. Data is 9,000. Okay. So this is simple. Now the thing is that joint life policy surrender value we got fixed asset 70,000, stock 7,000, data 9,000. This is what it has been realized. Now up to this, okay, one customer whose account was written off as bad now paid 800, which is not included in 9,000 above. Obviously this is bad debts recovered. You know that bad debts recovered will never include where? Bad debts recovered will never include where? In data. So bad debts recovered, normally you write entry cash account data to bad debts recovered account data to profit and loss account. So this is just like a windfall gain. You know, it's you can treat like a unrecorded asset. That's it. This you are never expected. So directly this 800 rupees can be transferred to which account? Realization account. So assets realized in cash transferred to realization account I am writing. So bad debts recovered ₹800. Bad debts recovered ₹800. Okay, then next. There was an unrecorded asset of 3,000, half of which has handed over to settled, half of an unrecorded liability of 5,000, and the balance of unrecorded liability was paid in cash. There was an unrecorded asset of 3,000, half of which has handed over to settle half of an unrecorded liability of 5,000, and the balance of the unrecorded liability was paid in cash. The remaining half of unrecorded assets was sold in the market, which realized 1,300. This is very important point. There was unrecorded asset of 3,000 rupees. Okay. half of which has handed over to settle half of an unrecorded liability of 5,000. First, let me write this. Unrecorded asset. Unrecorded liability. Unrecorded asset 5,000 or 3,000. Unrecorded liability 5,000. Now you can see unrecorded asset of 3,000, half of which means 1,500, as handed to settle half of an unrecorded liability of 5,000. That means 1,500 rupees worth of unrecorded has been adjusted to settle 2,500. What do you mean by this? 1,500, half of which adjusted to settle half of unrecorded liability. So that means I have given whatever the amount that has been received by me, 1,500 rupees, has been used to settle half of the unrecorded liability of 2,500. That means you are not paying 2,500. You are only giving 1,500 to settle 2,500. If you want to write an entry, you have to write like this. Cash account to realization 1,500. Realization to cash 1,500. Is this clear? 3,000 unrecorded asset. Half is how much? 1,500. Half of that unrecorded asset has been handed over. In fact, handed over means you are not realized. To explain this, I have written like if I receive 1,500 rupees, I will be paying 1,500 rupees. Simple words, this 1,500 instead of me realizing, I have given this amount, half of the amount I have given to him, to the creditor. It is not recorded. Creditor means the person to whom the business owes. So the 1,500 rupees worth of unrecorded asset, 50% of unrecorded asset has been given. See, this is what I am giving. You take this, whatever the amount I can adjust. This 1,500 rupees, you please kindly adjust towards the debt which I owe to you. That means 5,000 actually I am supposed to pay to you, but that has not been recorded. Now, since we are going for dissolution, we came to know that there is an unrecorded liability of 5,000. You take this 1,500 rupees, which I am not giving you in cash, but the rights on this unrecorded asset I am handing over to you. You take this rights of half of the unrecorded asset to settle half of unrecorded liability. So how much he is going to receive, whether he is receiving 1,500, he is not receiving 1,500, is his wish. And you may say, sir, is it not a loss? See, that is why the adjustment has been taken place with a consent, with the agreement of the creditor only. This particular thing has happened. That means half of the unrecorded asset has been handed over to settle half of the unrecorded liability. Now, what is the balance of unrecorded asset? 1,500 balance of unrecorded asset. Here, balance of unrecorded liability. See here, asset adjusted. Asset adjusted. Handed over towards half of unrecorded liability. Here, asset adjusted. Half of unrecorded asset adjusted towards half of unrecorded liability. That's it. Now, so that means as if you have paid 2,500. Now, what is balance? Tell me. 2,500 here. It is 1,500. Now, let us continue reading this. Then he said, and the balance of the unrecorded liability was paid in cash. The remaining half of the unrecorded was sold in the market, which realized 1300. Now coming back to this. The 1500 balance of unrecorded asset sold in the market for 1300, for 1100, I think. 1300, 1100, just a minute. Yeah, for 1300. And the balance of unrecorded liability was paid in cash. Now this is 2500. Balance 2500 paid in cash. So that's it. Now I need not do any adjustment for this. This entire thing is for just for you to, for me to explain you. Please remember, this is dissolution. No need to learn entry. Sir, how to write entry? Let us not make the things complicated. Okay, it's not required. Sir, how this has been adjusted? We have nothing to do with this. Simple words. I told you we have to learn the entry only for unrealized asset. Unrecorded asset has been realized in cash. Unrecorded liability paid in cash. Half of the amount that has been adjusted towards unrecorded liability, no need to write any entry, because we have simply given unrecorded asset has not been recorded. Unrecorded asset means not recorded in the books. Unrecorded liability means not recorded in the books. Now the 1500 rupees has been handed over to adjust the unrecorded liability. So why should you write now? Finally, what is that I need to do? See, this is what he is trying to confuse you. Please pay attention to this. I am nothing to do with whether I have handed over or only 50% I got or 20% I got. Only as far as unrecorded asset and unrecorded liability is concerned, please remember, you should be looking at what is that amount that has been realized. So how much has been realized? They'll tell me 1300 rupees has been realized in cash. Clear to all of you? Similarly, how much has been paid unrecorded liability? 2500. That means we should write entry for unrecorded asset. What is the entry you will be writing? Cash account at R2. Realization account. How much? 1300. And here you will be writing realization account at R2. Cash account you write 2500. Clear to all of you? Cash account at R2. Realization account 1300. Realization account at R2, cash account 2500. Are you following, all of you? This is what I should write. I'm least bothered about adjustment, handing over half of the unrecorded asset, half of the unrecorded liability. This is completed. Now coming back to this. Now almost all the items have been completed. We have already come, 5 assets are there. All 5 assets has been taken care. All these all 5 assets has been taken care, asset number 1, asset number 2, asset number 3, asset number 4, bad debts recovered, and also unrecorded asset. This also I'm adding here. Unrecorded asset, how much has been collected? 1300. Now liabilities paid in cash to be transferred to realization account. Creditors paid in cash, no? Creditors paid in cash is how much? 7500. Balance after taking by the partner. Then unrecorded liability paid cleared how much? 2500. Clear to all of you? These two are the payments made in cash. This is remaining creditors paid. Remaining creditors paid. Unrecorded liability paid. Unrecorded assets realized. Okay, now coming back to this. Salaries outstanding is there. We don't have any information of salaries outstanding. Please remember, whenever you are having liability which is to be paid to outsiders, whether information is given in the problem or information is not given in the problem, straight away we need to pay. Please remember, whether information is given in the question about outstanding salary has been paid or not, without paying outstanding liability, how can you proceed? How can you make payment to partners? How can you close the accounts? So therefore, whenever any information regarding any liability which is not being mentioned, we shall assume that it has been paid. It has been, we shall assume it has been paid. Okay. So here I am writing outstanding salary is also paid in cash. It is coming to outstanding salary is coming to 2000. So part of the creditors taken by the partner, one partner, remaining creditors paid in cash, unrecorded liability paid in cash, outstanding salary paid in cash. Okay, this is completed. Now coming back to this, my dear friends. Now up to this is okay. Now then what happened? B took over the responsibility of completing the dissolution and is granted a salary of rupees 400 per month. Actual realization expenses amount to 1100. Dissolution was completed and final payments were made on 30th April 2004. Assume that realization expenses are to be borne by the firm. You are required to prepare necessary ledger accounts in the books of the firm. Now, at the first point, let me tell you, B took over the responsibility. B took over the responsibility of completing dissolution and is granted a salary of 400 rupees per month. See, and this process has completed on 30th April. So, because three partners are there, at least somebody should take the responsibility of realizing the assets and settling the amount which is due to outsiders. Then you only disperse the cash. No, the entire process, realistically speaking, this is realistically correct because 4 months time, 3 months time, 3 months I think, 31st March, no, 30th April, sorry, 4 months, 4 months time they took for to dissolve the firm. Now, please remember, this is the problem we are dealing with. Balance sheet 31st December 2003. Dissolution process has been completed 30th April 2004. So we are having a gap of 4 months. During these 4 months, if they have carried out their business, again for 4 months period, you need to prepare final accounts. But in this problem, that has not been mentioned. Dissolution was completed. Final payments were made on 30th April 2004 has been given. So that means during these 4 months, no activity, that means no trading activity has been taken place. But we are having two problems, and group 2 advanced accounting, I think if I'm not wrong, this November examination, every time I was just explaining that is important model. Last time also we were expecting that is important model. That problem came. 6 months time they took for to dissolve the firm. During 6 months they have carried out some activities. So for that 6 months period, you need to prepare final accounts. We are having the 3 to 4 models repeatedly. Values have changed in the material. That also will be working out. That particular model came in the examination. So please remember that. That's a very important problem, important model. So 4 months time you have taken to dissolve the firm. 4 months time you have taken to dissolve the firm. This 4 months, if activity has taken place, you have to prepare separate final account. Then again you have to go for balance sheet. Then you should go for dissolution. But this particular problem, 4 months time they have taken, but there is no activity. So therefore, no problem. With 31st December it has taken place, 30th April, complete 30th April you will be closing the books. That's it. Of course, we don't mention chronological date. We don't have when this particular asset has been realized, what is the date of asset has been realized. But he is saying that 30th April the accounts have been closed, settled. Okay, coming back to this. Now the B who took over the responsibility for completion of dissolution granted 400 rupees per month. Now, this 400 rupees salary you have to pay. For how many months you have to pay per month? He has given 4 months time they have taken. So 4 into 400, 1600 rupees you need to pay. So is it not a business expense? It's a business expense. And to whom you need to pay? B, because B has taken the responsibility. So B is asking you need to pay salary. Then I will take the responsibility for dissolution. So that is why here I will be writing the entry for Everything I'm giving detail just to understand. In the examination, no need to do this. Realization account data are to be. $400 into 4. 1600. For 4 months, why I am calculating? Because January 1st to 30th April. 4 months period for discharging this for realization of assets and payment of liabilities, for undertaking all these activities. He has taken initiative. For that, the firm has paid 4 months salary. Okay. Then next, actual relation expense amount to 1100, and assume the relation expense are to be borne by the firm. You know the entry for that. Realization account to relation account data to cash account 1100. Okay, this is what, because firm has agreed to pay the expenses. Now I think everything has been explained. Now if you add this, you'll be writing cash to realization. If you take the total 70 plus 7000 plus 9000 plus 800 plus 1300 is coming to 88,100. Here 7,500 plus to 10,000, 12,000. 12,000 is cash to realization 88,100. Clear to all of you? So investment taken or A to realization, creditors taken relation to B. Of course, this relation amount paid also I have included here. No need to write here. This has been included. So come on, tell me. For assets realized, we can write this as a entry relation investment taken over by A to relation, creditors taken over by B, relation to B, assets realized, cash to realization, liabilities paid, relation to cash, then sold in the market, balance of sold in the market, cash to relation. This also I've already given the entry amount included there, 1300 rupees included there here. Okay, and balance of unrecorded liability also given. This 2500 also included there. Unrecorded liability, whether included or not, let me see. Included. Okay. Okay. Now important entries. Cash to relation account. You know the transfer entries you'll be writing. Only I'm giving the entries for this. Cash account data to realization. 88,100. next year. Realization account debtor to cash. Relation account debtor to cash. 12,000. Is it totally something here? 10,000 plus 70,000 plus 7,000 plus 9,000 plus 800 plus 1,300 is coming to 98,100. I think yes, I have written wrong. So all assets has been realized, including unrecorded asset, bad debts recovered. Then relation to cash, 12,000. No, all liabilities have been paid. Next, we got here written. I've written the entries. Relation to B, salary 1,600. Then relation to cash, expenses. Only I am giving the entries for key points, not for transfer entries. Then next, these are the entries I have written. And then investment taken out by A. A account debtor to realization. Creditors taken out by B. Realization account debtor to B. That means if you see, after transferring assets and liabilities, we are having 1, 2, 3, 4, 5, 6 entries is about realization of assets and payment of liabilities, including realization expenses. This is what the simple point. Now we can open the concerned accounts. As I told you, last class I have told you that we need to open the ledger accounts. The first ledger account which I need to, and one more thing I need to write now, partners loan, my dear friend. Let me explain even this one also. Ace loan. Say partners loan, even though it's outside liability, but it's like even though partner, unless it's a spouse loan is outside liability. Partner's loan appears to be like outside liability, but is insider. That means he's a partner. No, we can first clear off all the liabilities, outside liabilities. Then we can wait for a while. Then after discharging all outside liabilities, you can pay partner's loan. Generally, partner's loan, as I told you, in the notes also I have given, partner's loan will not be transferred to realization account. This partner's loan will be paid before you make payment to partners. So that is why even that entry I am writing. One more entry I am writing here. Ace loan account debtor. I think in the balance sheet they have given bank. So please remember, I need to use the word bank for all those things. I think I have written cash. Wherever I have written cash, you write bank, because in the balance sheet it has been as a bank. Ace loan paid. Before you make payment to partners, partners loan will be paid. When partners loan can be transferred to realization account, that I'll explain later on. Okay. If it has been agreed to taken over by the firm, then we should transfer partners loan to realization account. Otherwise, partners loan will never be transferred to realization account. Here also in place of cash you write bank, because bank has been given, Balance sheet bank is given, you write bank. Balance sheet cash is given, you write the term, use the term cash. Okay, now we can go for opening of an accounts. First I need to open realization account as usual. This is solution. If you can understand the above things, no need to write. This is only for you to understand. I've written like a tutorial note, all those things. Then you have to open partners capital account. There are three partners, A, B, C. Third account, bank account. If you open all the accounts at a time, completion of problem will be easy. Okay. Now this is first account. Now let us go for one by one. Let me start from here. Fixed assets will be transferred to relation account debit side, to relation account, to fixed assets 50,000 rupees. Then life policy 10,000. To life policy 10,000. To debtors, I told you gross amount should be transferred. To debtors 10,000. And then by provision for bad debts 500. Then stock 10,000. By provision stock 2,000. Then Investments 8,000. Investment 8,000. And what is fluctuation provision? 500. Fluctuation provision 500. Why fluctuation provision 500? Now you may be asking, sir, if you take 9,500, what will happen? If I take 8,000, what will happen? Instead of writing the asset on the debit side provision, I'll tell you one thing. See, in accounting, you need to close all the accounts. If you don't close the all account, then what happens? Provision account will be reflecting in ledger accounts. When you're going for dissolution, all accounts must be closed. Finally, all accounts has to be has show zero balance. If you don't do that, then what happen? The concerned ledger account may show a balance. So in order to close that account, we are writing this entry. Otherwise, even if you write 9,500 or 8,000, stock net value, investment net value 7,500, nothing will happen. Okay, then current account C. Current account C, I've already opened current account, partners capital account. I told you it will be transferred to capital account. C is current account. I told you it will be easy if you open all the capital accounts, So C's current account is being transferred to current capital account balance. Current account balance or loan account balance. Please remember, asset side current account balance or asset side loan account balance will be transferred ultimately to partners capital account. This coming problems, this will be useful. How much I need to write here? 2,000 rupees. Okay, then next, bank account 33,500. Bank account I've already opened, so I'm writing to balance brought down. $33,500. Okay, this is also completed. Now come back to liability side. A's capital 40, B's capital 30. By balance brought down. A's capital 40,000, B's capital 30,000. C nil. Then A's loan, I told you we'll be making payment to through cash. So then what I write here in bank, by leaving some space for discharging outside liabilities, because I cannot make payment to B's loan, to partner's loan, A's loan, before paying outside liabilities loan. Since I am going for the posting simultaneously, better you leave some space before, because you need to show the posting of payment of outside liabilities. Even if you write, there's nothing wrong in that. Technically speaking, you will be making payment to partner's loan after payment of all outside liabilities. So that is why here I am writing by A's loan. What is A's loan here? 10,000 rupees. Then coming back to this next. Reserve fund. This reserve fund will be transferred, I told you, to partners capital on all partners including C. 10,000. What is the ratio? Their ratio, tell me. 2:2:1. So by reserve fund 4,000, 2,000, 2,000. It is coming to how much? 8,000. Am I right? 8,000, not 8,000, sorry, 10,000. Just a minute. 10,000. Yeah. 4,000, 4,000, 2,000. Sorry. 4,000. 4,000, 2,000. So reserve fund also has been transferred. Next, I told you joint life policy reserve 10,000. will be transferred to relation account. So this is a very unique problem where we are having assets and as well as reserves on assets. Gross value will be taken to debit side, reserves will be taken to credit side. Then next after that, we are having creditors. About creditors, as I told you, gross amount will be taken to credit side, provision will be taken to debit side. So by creditors 19,000, to provision for discount on creditors, to provision for discount on creditors coming to 500 rupees. Okay, I think you all are following this. Gross amount will be taken. Creditors will show credit balance, no? To close that, it should be credited to realization account. Provision for discount on creditors, it shows debit balance, no? To close that account, it should be debited to realization account. You need to have a lot of practice. I hope you all are doing that. Every day I've told you, repeatedly telling you. Every day you need to practice, my dear friends. You need to practice. Salary outstanding also will be transferred to realization account by outstanding salary. By outstanding salary coming to 2000 rupees. So now everything has been completed. All the adjustments has been completed. All the adjustments has been completed. When all the adjustment, not all the balance sheet items has been completed. Now about these two paragraphs I have already explained, you know. So we'll see here. Working notes here. I told you. Investment taken over by A to realization. By A. Investment taken over. Investment taken over for how much? 6,000 rupees. Then B took over creditors. Here this entry also written. B took over the creditors relation to be 9,900. So realization to be part of the creditors taken over. Part of the creditors taken over 9,900. Clear to all of you? Then everything remaining things have explained you here. This entry has been posted. This entry has been posted. Now the assets realized in cash. I've written the entry bank to realization account. Again, I need not write all those things because it has already been cleared, explained here. If you want, this tutorial note can be written as a working notes also. Nothing wrong in that. But having said, this is for you to understand it. Everything I've explained. So 98,100 directly I'm writing by bank. If you want, you can give the list of those things. Or I'll do one thing. This tutorial note initially, let me make as a working notes now. Let me make as a working note. So initial tutorial notes, so many things I've explained, so I need not repeat again. Assets realized is how much? 98,100. Assets realized including unrecorded asset. It is coming to 98,100. Then similarly, we have seen that relation to bank. Remaining creditors, unrecorded liability, it is coming to how much? 12,000. So realization to bank outside liabilities paid including unrecorded liability. It is coming to 12,000 rupees. Clear to all of you? Then realization to this also completed. This is completed. This is completed. Realization to B salary. Relation to bank. These two. This is for realization expenses. No. And this already completed. AS loan to bank I've already given. So because AS loan showing credit balance, I've closed by debiting AS loan and creating bank. This entry I've already posted. Since he's not asking to open AS loan account, I have not opened AS loan account. Even if you open AS loan account also, there is no problem. But unnecessarily don't waste time. Only three important ledger accounts we are supposed to open: relation account, partners capital account, and bank account. Okay. Now this entry has been complete. Now I should write relation to B, relation to bank. Salary 1600, relation to bank, realization expenses. Realization expenses is coming to, I think, 1100. Now let me complete the simultaneous posting. I think the investment taken, or I should write. So realization to A, investment taken over. Investment taken over 6,000. Then by realization, creditors taken over, part of the creditors taken over. What is the amount of creditors taken over here? 9,900. Who has taken over? B. 9,900. Okay, then this is completed. Then let me finish off this one. Assets realized. Entry bank to realization. In bank account to realization, various assets realized including unrecorded asset 98,100. Then relation to bank. Here in bank account, by realization, outside liabilities paid including unrecorded liability. It is coming to 12,000. Let me write, because there is one also expenses, relation expenses is there. Okay. Then relation to bank I have written by realization expenses. Realization expenses is 1,100. You can see this one. Relation to bank 12,000 I have written, and relation to bank expense have written. Now relation to B, salary. In B here, by realization account, salary. B salary is how much? 1600. I told you for 4 months taking up the responsibility, you have paid 400 rupees as an a salary per month till the settlement of the till the closing of the books, dissolution, till the settlement of the amount due to outsiders, realizing of the cash. It has taken April 30th to wind up the total business, to closing of all accounts. So that we have discussed already. 1600 rupees. Now let us cross check again whether all the items have been posted or not. So the entries part also we have seen. This entry also written. See this, even if you don't want to write all those things directly, you can open, you can write the list of the assets realized here also. Since I can't do that like I'm doing on myself, I can't explain as if I'm a student. If I work out the problem, I think you can't understand anything. So for the explanation purpose, I've been telling you right from my foundation, even inter group one also, explanation is very very important. So for that purpose I'm writing one or two additional working notes. If you want to avoid, you can avoid. If you can understand, you can avoid. But where it is material, where it is comfortable, where it will give you clarity rather than giving you confusion, then better go for working notes. Okay, if you don't want to write all those things in here, SS realize list, you can give inner column, then we can write 98,100. So almost all the items has been taken care. Okay, the entries part, this entry has been complete, this entry has been completed, both aspects has been recorded, both aspects has been recorded. Both aspect means relation debited, B created, relation debited, bank created, Ace loan debited, Ace loan of course we are not open, bank account has been created. Now what we can do, the posting has been completed, posting has been completed. Now what is that we need to do? We need to first close which account? Realization account. In this problem you are going to have a profit. You may get a profit, you may get a loss. Okay, let us go for this. 500 plus 2000 plus 500 plus 10,000 plus 19,000 plus 2,000 plus 6,000 plus 98,100. It is coming to 1,38,100. One lakh 38,100 minus 50,000 minus 10 plus 10 plus 10, 30, 38,500 up to this, minus 38,500 up to this, 10, 10, 20, 30, 38, 38,500, then minus 9,900, minus 12,000, minus 1,600, minus 1,100. You are getting a profit of 25,000. This 25,000 profit is transferred to partners capital account, to Ace capital. 25,000 into, ratio is 2:2:1. Okay, 25,000 2 by 5 to B, 25,000 into 2 by 5 to C, 25,000 into 1 by 5 to A's capital, to B's capital, to C capital. Okay, it is coming to 10,000, 10,000, 5,000. profit transferred to A, B and C. Now in partners capital account we should write by relation profit 10,000 okay 44 10 54 30 34 plus 9,900 plus 1,600 plus 10,000. It is coming to 55,500. Okay. Then 2,000 plus 5. 7,000. Even though C's current account was initially showing a debit balance, after transfer into capital account and after closing that, I think still amount is due to the partner because of realization profit. Okay, 54,000 here, 55,500 here, 7,000 here. Okay, then 54 minus 6,000, 48,000. And here 55,500. Here it is 5,000. This is nothing but final settlement. To bank account, final settlement. This is final settlement. Okay. Now we can cross check whether our posting is right or wrong. We can know when you can transfer the amount that is being paid to partners to bank account by A's capital, by B's capital, by C's capital. A's capital 48,000, B's capital 55,500, C's capital 5,000. Now bank account has to be closed. Let us see the total on the debit side first. 33,500 plus 98,100. It is coming to 1,31,600. Let us cross check. 1,31,600 minus 12,000 minus 1,100 minus 10,000 minus 48,000 minus 55,500 minus 5,000, 0. That's it. So bank account has been closed. I think this is a very rarest problem I picked up intentionally. It was not there earlier in the material. We have added lot of problems. Actually, these additional problems, which is the model was not there, very old problem, but I thought of sharing with you. Unique problem. We can't around 30-40 problems we are having overall, but we can't do everything. The models which can cover, you should be able to do any kind of problem that we are. I'm picking up around 20 problems I'm planning to work out. So far we are complete on 2 problems, 18 more problems. Just it may take a lot of time, but it is important. It's a definite question. Weightage, you are having weightage on this. I think I told you last time the same problem, different model here. Of course, this is sale. Dissolved on 31st December, and they have continued the operations up to 31st March 2004. So 3 months activity that has been taken place. Of course, they have closed. They went for dissolution. They have sold the firm to one Mr. D, as I told you, dissolution and sale of a firm to another firm. I think this is the model where you are having 3 months extension. Similarly, as I told you, we also got recently examination. We got this model. Maybe I have not seen the values. I don't remember the values. This model came in the examination. Just a minute. Same model. Every time we are expecting this problem came. Number of times conversion and sale problem. Yeah, it's not there. It's somewhere in the beginning, I think. Uh, we're having a lot of problems on that particular model. We discuss. It's not here. I think this one, this model. November 14 it came. The same problem. The operation of the business carried on till 30th June 2014. When they went for dissolution, 31st December 2013. But operations continued for 6 months. They have done some activity, and same model came in the examination in this November 2020. So they've carried on their activity for how many months? 6 months. Then they went for dissolution. That means after 6 months, again you have to prepare final account for 6 months period. Then you went for dissolution. Of course, this is a dissolution. Then they have sold this firm to another company. I think this model came in the examination. Values may be here and there, but same almost. So I think this is how you should be preparing yourself, my dear friends. So I think you got some clarity of thought on this problem. We keep on practicing. Now slowly we are taking. This is also, you can write the heading that you can also write the heading that this particular problem which we have worked out. All partners are solvent. When all partners are solvent. Dissolution. You have to give the heading when you are copying down in the notes. Model 1. When all partners are solvent, dissolution. Captions I am giving. This topic captions are very, very important. So please remember, two problems I have explained. The sequence which I am explaining the same way you have to maintain the notes. When all partners are solvent, dissolution. We have seen the last problem also same thing. And tomorrow we go for when one partner has become insolvent, firm went for dissolution. That model we will take up in the next class. Okay, when one partner has become insolvent, firm went for a dissolution. That model we take. We work out two problems on that. Then we can go for when all partners are insolvent. Firm went for dissolution. I think that particular sequence will definitely will be going to help you. This is dissolution is simple basic level, but the thing is that advanced problem that is very key, like admission, dissolution, then floating a company, or retirement, dissolution, floating a company, insolvent, dissolution, floating a company. I think various models, and for everything we'll be giving caption. For this chapter, have a caption. When all partners are solvent, went for dissolution. Okay, thank you. We'll meet in the next class. I hope you got some clarity of thought on this particular problem. We'll meet in the next class. Till then, goodbye. Thank you. God bless you all.